let's talk a bit about the ETFs, right? Let's talk about these ETFs, the CFDs, what the difference is. So the ETF, for the people who don't know, it stands for Exchange Traded Fund, right?
Correct.
And now, how does that link up to, so from my perspective, I've seen the term many times. I know what it stands for. I configure it as a product on the trading platform. But to be honest, I don't know exactly how that thing works.
I had the pleasure of lecturing about funds, so I can give a very layman's definition. Think of an ETF as a bus, okay? And a bus has an owner, and it has a driver, and it has a predefined set of stops. And then you have people entering the bus with their bags and stuff and exiting the bus. Okay? So in my example of the bus, the people entering and exiting the bus are the investors. The owner of the bus is the person that actually structured this ETF. BlackRock, UBS, Goldman Sachs, whatnot. The driver of the bus, the fund manager, BlackRock, UBS, in order for the people that enter the bus to enter, there's a predefined set of rules. Let's call them the terms, conditions, agreement, offering memorandum, whatnot, whatever term you want to use, where you confirm to me that you are going to go from this route to that route. You're going to make these stops, and I can enter and exit at these times, at these stops. That's what an ETF stands for, basically. So someone structures it. They define where they want to go, the route, which is the investment strategy, what things I'm going to buy, what things I'm going to sell, when I do it, how often you can come in and go out, what are the costs to ride the bus, all of this stuff defined. And the investors read it and they decide, I go in and then I go out. Simple. So why do people use ETFs? It's economies of scale. If I tell you, Dino, manage my money, you need to tailor something to me. And I need to pay you for that. And for you to do it, it needs to be worth your while. So I need to pay you lots of money. Or I have lots of money and I can afford you. Well, for me, the retail guy or many other investors, we can't afford tailored, discretionary asset managers to run for us.
So that's what the family office, for example, like a family
Correct,
office.
Family office or even below that, because family office is for very rich people, but even below that, like for you to handle me, I need to be a certain high net worth individual or affluent investor, where there needs to be enough money for you to make it worthwhile. If I have 3,000 and I want to invest, you're not going to bother with me. So the way to do it is power through numbers, okay? We join together forces and we go to someone who uses technology to manage our money for a cheaper fee. It makes their time worthwhile because numbers, we pull them together. And it makes your time worthwhile because you have one strategy and you don't need to bother with hundreds and thousands of people's strategy. BlackRock, there's funds that could be like billions and billions. It could be, I don't know how many, it could be over 1 million investors. Imagine having 1 million separate portfolios versus one portfolio, and that's it.
Thank you for watching. If you liked that video and you want to watch the full episode, it's available here. Remember to like, subscribe and share. It helps the channel.